Hi, this is Teena. I'll take you through our view on construction sector. Construction sector had been in an underperforming state from past couple of quarters. This was primarily on account of lack of order inflows, delays in project approvals, coupled with higher interest rates. This all resulted in companies posting lower than expected revenue execution, delays in financial closures, and sharp decline in profitability for most of the construction companies. Even the road sector, which has been witnessing healthy activity in last 2 years, has also started witnessing some amount of slowdown during Q1 of FY13. We believe that this was more on account of poor economic conditions and even stringent lending norms by banks. But now we have started witnessing some green shoots in the sector. We have always been stating that there are a couple of factors which will decide the fate of infrastructure sector. One is across the board improvement in the order inflows. Secondly, financial closure of pending projects. Thirdly, decline in interest rates. Fourthly, faster environmental clearances and land acquisition norms. And finally, fundraising or stake sale by companies in their SPVs. We have started witnessing some of the action on interest rate front. Today, RBI has reduced the CRR by 25 basis point. And if you remember, in the month of April, RBI reduced the CRR by 50 basis point, which effectively means lower interest rates for the sector. And even companies which have been planning to do financial closure for their large size BOT projects will be able to do so at relatively lower interest rates. So we believe that decline in interest rates is definitely positive for companies which have high leverage like JP Associates, IVRCL Limited, NCC Limited. And even in terms of order inflow scenario, order inflow has also started witnessing some kind of improvement, and we all know that Prime Minister has set up a separate committee to look into or to review the performance of each and every individual segment of infrastructure, be it roads, ports, power, railways. So we believe that there would be some kind of affirmative action in terms of order inflow boosting across most of the segments. Because the pace of urgency that the government has carried out various reforms in past few days, we would be turning optimistic on the order inflow scenario for the infrastructure sector also going forward. However, as far as the fundraising is concerned, by companies by selling stake in their own SPVs or by selling stake in their own core companies, that is still to be washed out for. So we now, based on the little bit of green shoots that we have been witnessing in the sector, we now turn cautiously optimistic on infrastructure sector, and we would be preferring companies like JP Associates, IRB Infra, Unity Infra, and even Pratibha Industries because of their attractive valuations. And even we believe that with any kind of revival in the order inflow or decline in the interest rates would be positive for most of these companies. And the current market price of most of these companies and even the construction sector is factoring in most of the negatives. So we thus turn cautiously optimistic for infrastructure sectors, with top picks being JP Associates, IRB Infra, Unity Infra and Pratibha Industries. Thank you.